The U.S. economy expanded a touch slower in the third quarter than first thought. The final read on third quarter GDP, which is the broadest measure of economic activity, came in at 2% from July to September. The economy had expanded by 3.9% in the second quarter. Steve Liesman explains what's working within the U.S. economy and what's holding it back.
The government made a modest downward revision to third quarter growth, bringing gross domestic product to 2%. But that average and very pedestrian figure masks both strengths and weaknesses inside the U.S. economy. First, the strengths. The consumer's been doing just fine for almost 2 years now. 6 of the past 8 quarters have seen consumer spending growth of 3% or better. You have to go back to 2006 for a better running average than that. That's helped send autos flying off of dealers' lots and meant pretty good gains in home building. So if consumers are strong and they're such a big part of the economy and they've helped autos and helped housing, why isn't overall growth closer to 3%? Well, there's 2 reasons. First, business investment. Second, weak overseas growth. Equipment spending, it was solid in the third quarter, but it's been moving in fits and starts. It was up 9% in the third quarter, but just 0.3% in the second. It's been hampered by the crash in oil prices, where spending for rigs and pumps and trucks for the oil field, they've been slashed. Companies have also been reluctant to invest amid a climate of overall nervousness and uncertainty. Add to that a stronger dollar, which has made American goods more expensive overseas and challenged domestic manufacturers. They're trying to sell more expensive goods into mostly weak overseas economies. The bottom line, domestic growth outside of oil, it's doing pretty well. But weak overseas growth and a strong dollar, they're taking away from total U.S. growth. The optimistic scenario for 2016, job and wage growth continue to underpin strong consumer spending. Then the dollar and oil stabilize and weak overseas economies turn around, giving manufacturing and business in the U.S. a lift. That could propel the U.S. to the sought-after 3 or even 4% growth. It's possible, but many on Wall Street are more worried about the opposite, that the weak parts of the economy in 2016 drag down the strong. For Nightly Business Report, I'm Steve Liesman.